Welcome back. It is time for another update on the Chicago real estate market. And this is a good one. It's November, which means you know what time it is. It's time for us to dust off our crystal ball and make our predictions for the 2023 Chicago housing market. We're going to get our forecast for what's to come in the year ahead. So strap in, it's about to be a good one. Before we get into it, we must, of course, remind you that these are our forecasts for the whole Chicago real estate market. That's a big area. So if you want to know what's going on in your neighborhood or your city or town, just fill out that form on our website, plug in your name, email, and the neighborhood or town that you're interested in, and we will send you a handcrafted report on what's going on in that market. We can give you our predictions for what's likely to come in that market as well. Now, if you want to see if these predictions hold up, go ahead and give us a like and a follow and subscribe to updates, because we'll be back here next month and every month after that with more updates on what's going on in the Chicago real estate market, so you can see how we did. All right, let's go. First question, we're getting this one a lot. Will home prices crash in 2023? No, they won't. First of all, let's talk about what do we mean by crash. I think a lot of people are thinking of the last crash when home prices went down by about 30%. That was a big one. That's not going to happen this time. Things are much, much different this time around. However, home prices will go down a little bit likely, maybe 3 to 5% or so, depending on the submarket. Interest rates are icing demand, making homes less affordable. People can't afford to spend quite as much on a home, so they're going to pull out of the market. And again, that reduces the demand. But here's the thing. Here's why home prices aren't going to crash. Supply in the Chicago area is as low as it has ever been. And that is as of the end of October. Okay, so that's recent data. It is as low as it has ever been in the last probably 15 years or so. Okay, so yeah, demand is down, but supply is down too. So yes, not as many people are buying homes, but if you think about it, a lot of people who buy homes also sell their old home. So they locked in an interest rate, maybe they refinanced in 2021, maybe about a year ago. They're sub 3% on their interest rate. And they think, hey, you know what, we're doing pretty well. Right now, our monthly payment's about $3,000 a month, but things have improved for us and we think we could afford $5,000 a month. Let's go take a look at what we can get for a house for $5,000 a month. And then they go and look, and based on how interest rates are right now, they look at their monthly payment and they think, I can't get a whole lot more than what I have right now for an extra $2,000 a month. That's just some made up numbers for an example, but you take my point. The interest rates reduce people's buying power. That means they're less likely to buy a new place, which means they're less likely to sell their old place, which means demand goes down and supply goes down. It balances out. Now, of course, about 30 to 40% of the market, depending on the year, are first-time home buyers with no home to sell. And a lot of those people might be dropping out of the market. We certainly have seen that happening. The alternative to buying a home is what? Rent? Have you seen the rental market lately? Rents are going up just about as fast as home prices are. And unlike a mortgage, you don't get any of that money back towards your principal. It's basically a 100% interest rate. So we think a lot of this is kind of the shock of seeing those interest rates go up. And then once the year turns over, we'll see if first-time home buyers come back to the party. Now, there's a caveat. If there's a recession, if a lot of people lose their jobs, then we might see some of that rental market pressure go away. In other words, if a lot of people are losing their jobs, they may start to combine households again. So think roommates. That means fewer apartments rented, which means prices go down a little bit for rents, which makes that more appealing compared to buying. If there's a recession, people aren't comfortable about the future of their job. They don't think they're going to have a job in a year or two. They're not going to buy homes. That will reduce demand even more. But once again, the only way we see a major housing price crash is if a ton of people want to sell their homes and not that many people want to buy. Right now, the reason real estate prices generally don't go down is because usually when people sell a home, they buy another one. So something will need to change that makes everyone want to sell their homes and not buy another one. If you know what that black swan event is, go ahead and drop it in the comments. Let's talk about it. And don't say everyone fleeing Chicago or I'll block you. I'm done with that nonsense. That is not happening. Next up, will it be a seller's market or a buyer's market in 2023 in Chicago? Relatively speaking, the market is going to favor buyers more so than it has in most of the last 10 years. So rather than 5 to 10 offers on every listing, there will be 0 to 3. The best listings that hit the market in March or April are still going to get multiple offers. They're still going to sell quickly in the first weekend. They'll get 2 or 3 offers. The okay ones will get just the one offer. They'll have to negotiate a little bit. And the people who really didn't do their homework on price, or just the place isn't showing very well, they're not going to get any offers. They'll have to reduce their price. And that's where we'll see some of the price decrease come from, is from those folks. But again, the real estate market is seasonal, so sellers are generally going to have the upper hand the first half of the year, between January and June. That'll start to taper off somewhere in May and June, and then buyers will start to gain the upper hand towards the end of the year. Will interest rates go up or down in 2023? Well, Mortgage Bankers Association says that they may go up a little bit more, and that they're going to go down to the mid 5s by Q4 of 2023. And eventually, maybe in 2024, they're eventually going to get back down into the 4s right when we get to that presidential election year. If you know for sure where interest rates are going over the next year or two, call me. Let's go start a hedge fund, and then we'll just retire in 2023. How's that? The truth is, no one knows exactly where interest rates are going, but here are some things to watch. CPI, Consumer Price Index, as I record this video, we are about to get October's numbers tomorrow. It's not supposed to be great. If inflation keeps going up, that means interest rates will keep going up. War in Ukraine is always something to keep an eye on. That affects gas prices and, of course, Federal Reserve policy. Keep an eye on these things, especially that CPI number. That's going to really tell you what to expect in terms of interest rates. Should you buy a home in 2023? Look, a realtor will never tell you it's a bad time to buy a home, because generally the benefits of home ownership in this country accrue over time, and we get to see that firsthand. That said, is it as good of a time to buy a home as it was 2 years ago? No, that was probably a once-in-a-lifetime buying opportunity. So is it a good time to buy next year? It really depends on your personal situation. If you have the down payment, if you're comfortable in your income over the next couple of years, bottom line, if you plan to own the home for at least 5 years, it's probably a lot better than renting over that time period. So look at the rent prices on places that you would likely rent, and then find similar places for sale, and then see what the monthly payment would look like on each of those places. Compare the two. Keep in mind your out-of-pocket expenses isn't the only thing to consider. Buying a home has some tax advantages. It also reduces your principal and forced savings. And if the home appreciates over the next 5 years, as it likely will, then this will be a good investment for you over the long term. Consider doing a 2-1 buy down or buying points. These are things that can reduce your interest rate up front or over the long haul, as would a 5-1 or 7-1 or 10-1 ARM. These products are starting to become more popular to help reduce interest rates, take some of the brunt off of that increase in monthly payment. And then keep in good touch with your lender. Once interest rates go back down, you can refinance into a 30-year fixed rate. Or if you're comfortable in that 5-1 rate that you have and you know that you're going to move after that time, then you don't need to refinance at all. Last but not least, will 2023 be a good time to sell in Chicago? Well, depends on how you look at it. Again, the first half of the year is always pretty decent for sellers. The second half, not as good. It happens every single year. I've got some people who are trying to get on the market, and they missed that first half of the year. They end up hitting in August, September, October. They just don't get the results that they were hoping for. But on the one hand, yes, prices will still be high next year. Even if they come down a little bit, they're going to be higher than they were even in 2021 or 2020, which were these incredible times to sell a home. So from that perspective, with prices up, it's a good time to sell a home. That said, your experience will be less pleasant. You're going to have to do more work on staging. You're going to be on the market longer. You're going to have more phone calls with your realtor saying, how many showings did we get this weekend? Who's interested? Do we think we have an offer coming soon? It's tough to live in a home that has to be ready for a showing on short notice. It's got to be clean all the time. It's a pain. And when those offers do finally come in, the terms are not going to be quite as advantageous as they were before. Now, of course, if you're planning on selling a home in 2023, odds are you're planning on buying a home in 2023 as well. Therefore, when you do go to buy a home, you will get the benefit of all of those changes to the marketplace compared to this year, last year, and the year before. All right, that's a wrap on our predictions for the 2023 Chicago housing market. This market is a lively one, so you never know for sure quite what you're going to get, but those are our best guesses. Like I said, if you want to know what's going to go on in your neighborhood or your town, fill out that form on our website and request a custom neighborhood report. And of course, if you want to see how we did on these predictions, give us a like and a subscribe, and we will see you back here next month with another update on what's going on in the Chicago housing market.